The market has to go lower from here. We can't continue to make new all-time highs on a daily basis. And there's no way I'm playing the market to move higher from here. Now, these are all comments that we've heard from traders pretty much since we opened Netpicks over 20 years ago. And the problem with these statements is that the market really doesn't care what any of us think or it should do. The market's going to do what it wants. And as a result, it's crucial for us to trade based off price action on the charts instead of our personal opinions, and especially the opinions of every analyst online or on TV. So looking at current market conditions, it might seem like we only have two options. Number one, we can continue playing the market up to new highs on a daily basis, or we can blindly buy puts, expecting the market will move lower. Now, neither one of these really sounds appealing. However, are these really our only two options? So many times traders are programmed that they have to pick market direction in order to be active. And this just doesn't have to be the case. When trading options, there are trade types that allow us to be active without having to make a strong directional bet. For example, in our Options Academy trading room, we took a look at TLT, which is the bond ETF. Instead of buying a long call or put option to place a directional bet, we looked at iron condors. And while that name can be intimidating, it really is a pretty simple trade. All we're doing is selling an out-of-the-money call spread and an out-of-the-money put spread at the same time. In doing so, we're betting that TLT will stay inside of a range, or what we call our profit window. And the nice part about the iron condor is that it's a very forgiving trade. We don't care if TLT moves higher, lower, or sideways. As long as it stays inside of our profit window, we're fine. In our example, we decided to go out to the August monthly options and sell the 141-142 call spread and the 135-134 put spread at the same time. In this case, we were selling the 141 call and buying the 142 call to make it a risk-defined trade. On the put side, we sold the 135 put and bought the 134 put to make it a risk-defined trade. We collected 0.52 or $52 per spread to put this trade on. Now that $52 that we collected to put the trade on is our maximum profit potential. Our maximum risk is 48, the difference between the strike price, minus the credit spread when putting the trade on. So to calculate our profit window, we need to get our break-even points. And there's going to be two break-even points when trading an iron condor. Upside break-even point, we calculate the break-even point on the upside by taking the short 141 call strike and adding in the 52 cents that we collected when placing the trade. This puts the break-even point on the upside at 141.52. On the downside, we take the short 135 put strike, subtract the 52 that we collected when placing the trade. This puts the break-even point on the downside at 134.48. And as long as TLT stays between 141.52 and 134.48, we can make money. So even though we give up the home run profit potential when placing trades on condors, it can be a great trade because of all the different ways we can make money. We can make money as time decay adds up, which means every day we hold a trade, we make more money. We also make money if volatility decreases. We make money if TLT moves up, down, or sideways as long as it stays inside of our profit window. This gives us 5 potential ways of making money on this trade. When buying a call or put option, we only make money if the stock moves higher or lower, and the stock has to make that move in a hurry. While the current market environment can be very frustrating due to the grind higher on very low volume, you have to make sure you're trading products that give you flexibility. The options market allows us to do just that better than any other product out there. Now, the iron condor trade might not be the most exciting trade type in the world, but it does give us a nice way to make money in a slow market. And as a full-time trader, this is what you should be looking for in the long run. We would love the market to make big moves all the time, but that's just not realistic. Iron condors are great because you don't need a strong directional opinion on the movement going forward. You just need TLT, for example, to stay inside of a range. And that takes a lot of pressure off of your trading. So don't get stuck spinning your wheels during slow market conditions. Challenge yourself to find new trade types that will better reflect current conditions. And if you do so, your results will improve in a pretty big way. Having a diversified list of trade types will give you a much better equity curve in the long run. And if you're looking for ways to improve your trading in a slow, uncertain market environment, I think the iron condor is a pretty great option. Options trading has become very popular over the last few years. Netpicks' own options guru Mike has put together a hot list of some of the best names to trade in the options market. You can click here and download your free hot list to see what names Mike has been piling up the winners with.